I don't think the blockchain was built for us. I don't think it was built for us as users. I think that it was built for AI agents, and we were the test case. We are the beta of what blockchain's really meant to be. And I think it's meant to provide infrastructure for agents to become economic actors in the world. The next billion users of the internet are not going to be human. They're going to be agents.
Hot Take Season 4/6. Drew Austin, founding partner of Redbeard Venture. I guess you can tell where he got that from. Very impressive collection of collectibles behind him. But even more impressive is that the thesis he just laid out is one he's been carrying for years, long before the rest of the world started catching on to it. Sunwoo, tell us more about this one.
Drew's been in crypto since 2013, back when you bought Bitcoin in parking lots. He's been a founder since he was 19 years old, built and sold an AI recruiting company called Wade Wendy, and started Redbeard as an AngelList syndicate. And 5 years later, it had done 250 investments, around $75 to $100 million deployed in SPVs, a $25 million fund one, and he built Denarii Labs, which is a tokenomics accelerator.
Fund 2 is his bet on the world he just described, the one where agents are the real users of the internet and the infrastructure gets built around and for them. Let's get into this.
Drew, welcome to the Slice Pod. Thanks for joining us. You've been building companies since you were 19 years old, never had a real job, and you bought your first Bitcoin in a parking lot in 2013. By the time most people had even heard of the word crypto, you'd already lived through two versions of it. I want to understand how someone builds that kind of conviction. Now you're running Redbeard Ventures out in Connecticut, but let's start at the way beginning. Growing up, what were you into and what did you want to be when you were older?
Thank you for having me. This is going to be a lot of fun. The thing I think that when it comes to mind when you ask that question is I've always been like a collector of things. You could even see like in my background, I collected cards and figures and autographs and art. And the idea of collectibles has been something that has just been from 5 years old on. I just remember early in my life, the idea of collecting things and rarity and scarcity and ownership. That concept connected with me. And I think that's one component. The other component is I've been an entrepreneur my whole life since I was 19 years old. So my first business was started when I was in college. The idea of ownership and teams and distributed contributions and equity, those are concepts that I had to think about at a young age, whereas most people don't think of equity. It was just not a conversation for them because they went and got a job and that job paid them a salary and that's what they thought about. My first company was a concierge service for college kids. It was basically having a website where people were using credit card and depositing money into their account and were ordering food from delivery. And I had delivery drivers working for us. And my freshman year floor was my drivers. And I had like a bunch of people that worked in the office and all of that. And we got an office in the Whitman School of Management in Syracuse. First, it was an attic. And then they found out that we were building businesses and I was an entrepreneurship major and they brought us in. But all that kind of being said, between those 3 points of like connections to like being frontier technology and all of these different pieces coming together, when I saw Bitcoin and I saw the understanding of a digital first society, like digital first currency, the idea that like this was a global currency. And I always felt that like the world was shrinking due to technology anyway, and that these like fake geographical lines almost only exist because of politics and religion and race and ridiculous things that like really don't have any impact on the specific technology itself. So fast forward, I think like 2 years after that, I started looking into what are digital collectibles. They were called colored coins back then, before they were called NFTs. I just got really fascinated with the idea that like, what is a certificate of authenticity on the blockchain? Or what is a digital collectible? What does scarcity mean in a digital world? And then fast forward, I came across Super Rare, which was the first like digital art marketplace. And I started buying art, like real like art that I liked, that I still own to this day. In like 2018, 2019, I was running an HR tech software company at the time. And during Christmas that year, I bought everybody digital art. Everyone's like, I don't want this. How do I do digital art?
In that moment where you gave everyone this thing that you were really excited about, but nobody had the reaction that you were hoping for, nobody really got it. How do you know whether that disinterest is actually telling you something or whether it's actually the signal that you're waiting for?
To me, that's the signal of it being early. And that's what makes it exciting, is the fact that you're catching something before everybody else really understands what is happening and where we're headed. I think that's what ultimately made me gravitate towards venture capital in the long run, is because I've been looking at the world this way. I've always seen things and where we're headed, and that's how my brain works. And it's a gift and a curse. Sometimes you're just too early. Like when we were building Google Glass, it was like we saw the future. To me, I'm more bullish on glasses today than I were 12 years ago. I think they're going to be a massive part of this next wave of technology that's coming, but it was just too early. But so there's a double-edged sword. You see the future, but you also need to consider timing. But for me, it's like there's two signals. There's one, it's like the interesting, smart, curious people that want to know about it more. The people that are scared or rebel or don't want to look at it, that's the other signal that you're early. And I think those two combined are really exciting and valuable.
And for those periods where crypto blew up in everyone's faces, a lot of people who were early believers walked away from it. And you didn't. What kept you going?
I don't know. I think about that a lot. I think that my thesis for crypto was that we are and were early to what it was. The user experience wasn't right yet. The consumer application wasn't right yet. If you gave up on the internet being a useful tool when we were just building the rails of telecom, then you would have I guess in the back of my mind, it's like that meme where the guy's digging and one guy quits and the gold is about 2 feet in front of him and the other guy keeps digging and, he's ultimately going to get to the gold. And it's like, I just felt enough conviction to be like, there is too much opportunity here and it makes too much sense to live as we continue to become more and more of a digital society. How are we not going to have a global digital financial system? And then that with the fact that in the past, I'd say about 2 to 3 years and my experience with AI, I've been saying the same thing that now is finally coming to fruition, which is I don't think the blockchain was built for us. I don't think it was built for us as users. I think that it was built for AI agents and we were the test case. We are the beta of what blockchain's really meant to be. And I think it's meant to provide infrastructure for agents to become economic actors in the world. The next billion users of the internet are not going to be human. They're going to be agents. That's my foundational thesis for Fund 2, really, for us, is that I want to invest in that world and all the economic infrastructure that's needed. And that's an exciting world to play in. There's a lot to do.
Let's talk about it. In 2021, I know you launched a syndicate on AngelList.
Yeah, that's how I got started.
Yeah. How did that happen so fast? And was getting into venture always something that you thought about?
I always wanted to get into venture because I am just a curious person and I love new technology. So I gravitated towards it, but I never really had the chance because I was a builder and building, and I couldn't stop seeing opportunities. Every time I stopped something, within days, I'm working on the next thing. I just knew what I wanted to work on next. And then while I was selling Wade and Wendy, I was already working on my syndicate in the background. I was doing that during the exit process. And part of my exit process was I was going to find all my team jobs, but I was not going to continue working. I was exiting personally. I was up till 2, 3 in the morning every night on crypto. And then I'd wake up in the morning and sell HR software. And I was like, I just can't do this anymore. As I was selling that company, I was getting really deeper and deeper into Web3, into crypto, just as a user, because I was buying NFTs and getting into NBA Top Shot and getting into Zed Run. And I decided I wanted to start moving into venture as my next gig, because I've been the operator for so long. And I was so tired of working on one idea. I had too many things I was interested in across frontier technology. It wasn't even just blockchain. It was AI, robotics, space, all these different sports, all these different things I was so interested in investing in and being a part of. I've never really had an actual job. And I was like, how do I break into venture capital? Well, I don't come from a finance background. I don't have any real material investing background. So I just said, let me start a syndicate, start finding deals and things that I'm finding exciting, and let me bring them to people and connect the dots. And I kind of took off. I just didn't know, I never knew the full power of a syndicate, but I just hustled and just do what I do. I built it as a startup. I attracted a couple people to come work on it with me after I did it myself. And they came and worked on it for carry. And there was no income, but I also had my exit and I had some compensation from the exit. At the time, we were finding some of the more exciting companies, especially in the Web3 space. When these were really competitive deals, I feel like I was battling. I was Zed Run. I was up till 2 in the morning every night with the guys from Australia. This was probably the first real main Web3 breakout game. And to this day, I think it's probably the biggest, more successful in terms of revenue for sure, or at least one of them. And everyone was competing to get in that game. And I ended up connecting Andreessen and TCG. And I'm a syndicate, Redbeard Ventures syndicate. And we're bringing this whole deal together. It was really an interesting experience. I remember for NBA Top Shot and Dapper Labs, I was competing with Gary Vee and like Shaq, and I ended up getting squeezed in for $500,000 because I was such a real user and I understood the business and product at a deep level. They like felt like I brought something unique. Same with Zed and same with Super Rare. And Super Rare happened to be my first investment ever on the platform because that's what brought me into Web3. So like I started doing Sandbox and then like Genies and like all these companies that like at the time was like the hottest thing you could possibly get into, and they were hard to get into. I just learned a lot through that period. You learn a lot of good things, you learn a lot of bad things. Like you learn a lot of skill. And like now between the syndicate experience and Fund One experience, like I could reflect back and be like, holy shit, there's a lot of learnings in there. I was never taught venture capital. I never worked at a fund. The only way I was going to learn was from networks, from mentors, and then from work and being in the fire. It's been, 5 years since we started the syndicate. We've done 250 investments. We've deployed probably 75 to 100 million in capital in SPVs. We have 9,000 accredited investors between Echo now, which has become a really big part of our strategy, and then AngelList. And I have a team of people that work on it as venture partners or operators or whatever it might be. And we get a lot of deals. It's like a top of funnel of our community, basically, which has been really nice. It's kind of been the springboard for everything else we do.
Yeah, I like the unique recipe that brought you here. I think that's fascinating, and honestly what's gotten you so far and to be this successful with it. I'm curious, why did you decide to turn it into a fund? When was that moment where you decided that this should become something with the real portfolio construction with LPs behind it?
Yeah, so there's a few components there. The first one is like syndicates don't pay salary. There's no income. It's just carry. And at some point, like you got to have an income and have a job. Like I was getting married and I had my first kid, and you just need like there's some level of stability. I've built a brand. I built a reputation. I want to be able to commit to more important deals and be able to know that like I can write a check without having to sell every syndicate angel on it. Because there's the times where like you see something that others don't. And unfortunately, you can't invest in it just because others don't. So like the hardest part about syndicates is like really the translation between why you like this deal and why they should like this deal. That's a very hard bridge to cross and communicate. And there were many deals that we just couldn't get done because maybe they were too deep tech or whatever it might be. There was a point where it's like, okay, well, we need to have capital to commit so that we can be more effective and have a better process. And I also wanted to build a team and really start to build a bigger organization. And honestly, from day one, there's this new concept that everyone's been talking about of firm over fund. And I've been a believer of the firm over fund model since day one. I think when you think about it as a firm over fund, that's when you start to see compounding results.
Yeah. And the way that you're thinking about it as well, it's like you're building tools that let you compound into what you're really good at, which the Denarii Labs. And let's talk about that. What were you noticing 18 months into Fund One that made you think about Denarii Labs and actually build it?
So between the syndicate and the tons of deals we were doing there, and then the fund, now that we were deploying capital to the fund, at that point, I probably did like 50 to 100 blockchain companies of investments. And there was a consistent pattern I kept coming across, which was one, like didn't matter what type of founder or company it was, whether it was like a company that was doing DeFi, AI, or gaming, it didn't really matter. Whatever kind of infrastructure, whatever it was, the one constant was they had really no idea what to do about launching a token. Because that, no matter how experienced they were in their craft, launching and designing a token was something they're probably either going to do for the first time or maybe the second. And there just wasn't a ton of information or knowledge or know-how on how to do a token. All of a sudden, I'm seeing 50 of these, and I'm working on the white papers and tokenomics and meeting market makers and OTC desks and exchange and understanding the process for getting listed on exchanges. And I was just like, you know what? Like, why aren't we operationalizing this skill? Like, why don't these resources in this network? The other part of it was like, you start to learn very quickly that like, you know, we raised a $25 million fund, which is a very healthy first fund, but it's still 2% management fees. That's not a lot of money. It's like you can maybe hire one person, two, with legal and accounting and all the stuff that you need and the admin and all of that stuff. So like, you can't really build a team. And I guess like part of me in my whole life has always been like, I want to build a team. I want to figure something out, learn it, find what the skill is that's needed to do it better than I am, delegate it to that person and move on to the next capability. That's how I think. I was like, you know what? I can't support the portfolio the way I want. I can't diligence the way I want. I wanted to be able to do more than I was even capable of. You're learning this as you go as a fund. I had a team, but I was the founding GP. So it was you just start to learn really what the capabilities are of a fund that's needed. And so Denarii came together because I see a pattern with the tokenomics side of things that's needed. And it would be really interesting and valuable to build a team of experts around tokens especially because that's our asset class that we're investing in very often. So that was one component, and that allowed me to build that team. The second component was that a lot of the companies that we either invested in or were networked with, just because the nature of the crypto cycle happened to be infrastructure. That's just where we are in the whole crypto journey. It's a lot of infra, not a lot of apps yet. The number one customer in crypto is, I said, what do these infrastructure companies need? They need builders. So I said, well, how can we help these companies? Because again, I'm always thinking from an entrepreneur perspective, like, what did I need as a VC? What did I need as a founder? That's the way I think about everything. So it's like, what did I need? I needed, like, when I was early stage and didn't have much capital, if I didn't have to hire these expensive experts to be able to come in and help me with tokenomics, but I could use investors or I can use resources, whatever that might be, that would be an advantage. Denarii became this consulting team and an accelerator manager team. RBV is the investor. The companies are getting early stage capital plus all this knowledge and resources. And the chains are getting a BD engine because they're seeing lots of new companies through our evangelism and efforts and education. That became like the real foundation for Denarii, was just this idea of like acceleration as part of our model. And I think it's a really powerful model for crypto, especially because like in crypto, you get equity and token, which gives other paths for liquidity. And you're getting at much more attractive terms, which, because we're really putting in the sweat and work into it and helping them design it. And that's the other major part of it, is like coming in at the design phase, I think is really important in crypto, because I just think you can start to help them navigate some of the obstacles or things that you're going to run into as best as you can. In crypto, it's usually like when the world goes down, everything goes down. There's really no stopping it. But at the very least, you can be more strategic about how you structure things. So those are some of the learning experiences that you take. And I felt like if we can have those skills, at the very least, even as a fund, now that I have these people on my team, if it's a competitive deal on the venture side, and I have these people as part of our resources, we're going to be very competitive. If it's us and my resources versus another guy who wants to write a check, I think we'll be more valuable to their cap table. So that's what we really did. That's what we built.
I know you mentioned when we spoke previously, you had about 900 applications across 2 cohorts in 2025. What's the percentage of them coming to you, or you guys going to find them, and where are they coming from? And also, how do you filter for the 10 that make the cut?
Yeah, so there's a few components. I think one is like the volume comes from some of the marketing automation that we've done and the content we create and the events we produce. So like we get to see a lot of breadth from that side. Then it's also, we have partners and sponsors. So that's one side of it. And then the other is just like us going out and targeting. And I think like ultimately, I think you find the highest quality generally comes from the targeting, but you find some gems that you would never find from the marketing. I think you need a bit of both. The other part of that is, especially for these ecosystems, a company that might not be venture backable at that moment for me may be very valuable to them as another builder in their ecosystem. So the fact that maybe it's not the right investment, but I can introduce them directly to that chain and they're meeting all these new builders, that is just as valuable to them, potentially, sometimes even more valuable than just the 3 companies or 4 companies that we're going to invest in during that cohort for their track. So like generally we're working on 3 or 4 tracks. For example, like one might be Avalanche, or one might be a Flow blockchain, or one might be specifically ZK rollups. And then we have usually a general track. They all come together for a cohort, and then we work very intimately with each company. So there's like some group stuff, and then there's individual work every week. And the goal is to just get them prepared and get them thinking right and get them to understand how to build some kind of like the economic systems within their organization to be a sustainable business in the crypto world, really. And then that's evolved as we've learned. We've now done 4 cohorts, I think it is now. This is our 4th cohort. So we've invested in about 30 companies or so through the accelerator now, writing 100K checks into each company. So that is part of our strategy. When you get to work hands-on with these teams, there's a lot you learn. Like the reality is, I don't care what anyone says. It's like recruiting. Like you only know someone so well during the interview process.
Shifting gears a little bit, going back to this topic that we touched on in the beginning a bit briefly. For most people, crypto blew up in their face. The NFTs, the meme coins, the whole degen era, it left a lot of LPs and a lot of GPs as well that were running up crypto-focused funds just burned. And I know you're raising your fund too into that headwind, but what do you see differently about today in 2026 compared to 2021?
Oh God, so many things. Well, first of all, when I was raising the first fund, I think I raised 25 million in 3 months. It was a very quick raise. Like at that time, especially consumer Web3, there wasn't that many people that knew it as well as I did. I don't think out there really. So there was that component. And then the second side of that was there was just a massive amount of FOMO when crypto was also very, very in vogue. It was really hot. Fast forward to now, I think that we are at a very different time in crypto. I spent 6 months at the end of the year last year where I was like, am I still aligned with all of this? Like, I spent 13 years here building in this space with a complete passion for what was possible. And everything that I believed in was starting to die. It just had not only died, but it was hated. We weren't the underdog anymore. So it was not only that we were not the underdog and people rooted for the underdog and we were this rebellious anarchist. It was being corporate takeover and meme coin bull. It was like the worst of both sides. It was like the highest end of banking and corporate and suit and tie, and then the absolute worst of like degenerate activity. And the in-between stuff just died. And that was really hard for me to digest because I just started to lose interest in everything. All the deal flow I was seeing was just not interesting and exciting to me. I made less investments in the second half of last year than I've made in the last 5. And that was a challenge. So for the first time, like, I feel like I'm not the kind of person who gets burnt out. Like, I've been a founder since I was 19. It finally made me realize that I haven't been wrong this whole time. These last 18 months while I'm thinking about this thesis and where I'm like, I knew where the world was headed. And I've known this for 7 years when I was building AI agents, AI chatbots. Like, it's finally now real. This is the moment. The connection of AI and the blockchain coming together. This is what I've been excited about for all these years. So it reinvigorated me. Like, I felt over the last 45 to 60 days, I sat the team down. We did like almost like a remote retreat. And for almost 2 weeks, we just sat down discussing our processes, our workflows, how we operate, our thesis, the sectors we're interested in. What does diligence look like? Like, this whole world changed in the last 2 months. I'm the most excited I've been in a long time.
I love that. It's very clear that you've been extremely thoughtful about the types of founders that you're collecting in a way into Redbeard Ventures. I'm sure that you've had the same level of thoughtfulness when you're collecting the right type of customers as your LP base in Redbeard Ventures Fund 1 and 2. I know you're shifting things up a little bit where you're going away from the crypto native VCs, investors who wrote you for the first fund, and then towards more institutional capital and allocators for fund 2. And this one's going to be a little bigger as well, like between 30 to 50, I know you mentioned. How are you finding those conversations? Are they understanding this shift that you're seeing, or is it like a big, do you think that's really still lacking?
So it's interesting. For the past 12 months, like the year of 2025, it was very weird. It was like crypto native investors are in defense mode. The people that have been all in on crypto are really playing defense. They're trying to defend their positions. They're either trying to get into more pure liquid positions or trying to be nimble with liquidity because they've been getting beat up for the past year. There's no FOMO anymore. So from a crypto perspective, it's a very hard picture. January 5th, I'd say like the world changed. The new models came out. I dug into vibe coding. I understood that this was like our horse to automobile moment. I understood that I put my agent in a social network for other agents. It starts talking on Moltbook. The next thing you know, it's asking for a crypto wallet. And it's just like, it's not asking for a bank account. It's asking for a crypto wallet so it can operate and become an economic actor in this space and perform things that I'm asking it to do. It's asking for stable coins. It's asking for Ethereum, or it's asking for Solana. It's not asking for fiat or my credit card. I just realized that like, this was it. Like, this was the thing I've been saying for the past 5 years. Like, I literally was like in my deck. It was like the past 12 months has been like in my deck was like websites were the way we experienced Web 1, mobile apps were the way we experienced Web 2, AI agents on blockchain rails is how we're going to experience Web 3. And that now all of a sudden for the past 6 months, I'd say there started to become more interest, especially because of the government from non-crypto. So a lot of my pitches were to the non-crypto natives. And that's where most of my interest over the past 6 months became more real, was either from like strategics that need like, that see us as ecosystem builders, or like the Web 2 community, though that looks at crypto now and says, hey, I need to get exposure here now. There's the government regulation, there's institutional capital, infrastructure starting to mature. I need exposure. Then all of a sudden over the last month, you can see the aha moment. It's like, I get it. Okay. I could just like kind of walk people through like how this agent economy is going to like work and like how it's going to come together. And you start to like piece it together for people. And if you can help them connect the dots, and our agent's going to take in the world. How are they going to get data? And is it going to be glasses and AirPods and wearables and AR and VR? Hardware is going to get way cool again because it's defensible. And it collects a unique data set that nobody else has to provide context to agents that nobody else has. So I just think that right now, so like you start with like how they take in the world, and then you start to move into the infrastructure they need, like where are they getting compute from, and energy and data and memory. If you start to think through that stuff, it's like where also do we want it all centered around one or two companies, or do we want distributed options and decentralization? And I think that people are going to start to get more and more concerned with like how important this data is, and how do they own it, and how do they make sure that they get to benefit from it, not just the other companies. So like that's the thing that drives me and what I'm thinking about for this next fund, and how that's the differences in terms of where we were then was all experimentation in the world in terms of the consumerization and ownership, but ownership wasn't really connected yet. The reality is it's like agents are the real user of all of this. And that's where it's going to get super fascinating. And then you just have to think about what's defensible in this world. And that's going to be the biggest question people have to answer.
Where do you see Redbeard going into the next future funds to follow?
And we're a team of 10 now. Everyone we hire has to be basically, no matter what your role is, you're either an investor and a product manager. If you're head of sales, you're also a product manager. If you're an analyst and a product manager, like you got to be in product now. You have to understand how to build and design and automate your workflows. I personally built the foundation of our new investor operating system. And we're removing our CRM. Like I'm saving $6,000 a year, getting rid of our CRM. And now we're all building on top of that stack now. And we automate every single thing we do. And we're building decision intelligence and knowledge graphs and networks, and all of the stuff that I applied from my recruiting AI days are coming into handy. I'm coding till 2 a.m. every night. Like I'm back to like being a degen, but in a productive way, like productive degen behavior. I'm constantly building and tinkering and learning, and it's been really exciting. Where do I think RBV goes? I think we continue to build. We continue to deploy capital into great businesses and really great technology and founders, but we also build. Like that's why Denarii exists. Like Denarii is a lab. It's a playground for us to experiment. We build skills. We build infrastructure. We're already getting into more of like, we're becoming more of a validator now. We became a validator of the Canton network. Now we're looking at 2 other networks to become a validator of. I want to build distribution, whether it's build or buy. I need to figure out distribution. I've always been a big person on media and like content as a marketing vehicle. And I think it's more important than ever before. I think that's going to get really exciting. So we have to build and own distribution. I think that's critical. So like, I guess it's the same story. It's like, how do you become an entrepreneurial investor? I'd like to eventually do an NFT asset fund. I'd love to do an asset fund that focuses on art and collectibles. Like that's just something I've been passionate about for so long that I'd love to have a long-term asset fund that's purely focusing on high-end digital art and collectibles. Like I think that's going to play well in the long term, and now's a great time to be looking at it. These are things that I'm a big believer in the firm. Again, just like this ecosystem that we can build, I want to continue to grow the syndicate because I think SPVs are a great option for many people. I believe in the ability for anyone to be able to get access to startups and venture capital. That's been my vision. I believe in entrepreneurship and I believe in innovation. I believe that everyone should have connection to that.
Usually my last question before I hand it over to Fabry is, what's your hottest take? What is something that you will die on the hill for? But I feel like you've kind of laid it all out throughout our conversation. So thanks.
Basically everything I would say. I think the thing I'll die on the hill on is I really believe in the vision of a metaverse. I really do. Like there's this company, Wilder World, that I just absolutely love. This was what some of the things that really bothered me about crypto for so long. Is like I'm watching these incredible builders build such impressive, incredible technology and visions of the world that we want to see, and they get no attention while Fartcoin becomes $1 billion company. It was making me so frustrated with this space because at the end of the day, that's Wilder World's one of those companies that leans in. They're not afraid of crypto. They're going to go all in. They believe in a digital society. They believe in AI agents being productive assets. They believe in gaming and an open world, an environment where we're going to be able to earn, socialize, work, produce, and they're building it. And actually, like, it's there. And they actually were able to execute the vision. So I'm hoping companies like that get the opportunity in this world to get the resources and be realized for their incredible work that they do. That's what I hope for. But that's one of the many mountains I might die on.
Bob?
Let's assume that I couldn't be further away from a degenerate, and I'm running my family office. I'm transitioning my grandfather's wealth that was made primarily from the family business into real estate. And then my dad put that into public assets and private equity. And now I want to get like a slice of the singularity that you're describing. You must encounter some pushback around the fact that it's like you're just surfing a hype cycle to another. And these two things are nowhere near related to each other. There is definitely a lot of skepticism around trend surfers, so to speak, and also bundles of sorts, because they're pitched a lot of low-grade quality product, let's say, like a biotech blockchain-enabled AI fund, for example. What's your argument to this? How can you get them to see the light?
I guess I could justify my own journey as a way to be like, hey, you're damn right. There's definitely people out there that are just like trend hopping. And there's no doubt in my mind that as I talk about things without knowing my story, the easiest thing to say is like you're hopping from trend to trend. But when you've been at the core of frontier tech, spent 6 years building an AI company and selling it, spent 12 years in crypto, not leaving during those downturns, but doubling down during the downturns, being the holder of NFTs that you believe in for the 10-year journey, and have been pitching for the past 18 months this thesis of the blockchain wasn't built for humans, it was built for agents. My story adds up. And from that perspective, I think I could justify that enough to myself. There's a real thesis and real foundational thinking and experience that comes with where we are today and why I'm here. Second, I would say is that the one thing you always have to do is connect the dots for people and make it something that they can relate to. So when I'm talking about I try not to go too deep into the technical component. And I never talk about TPS or transactions. And I want to talk about the use cases, the things that are going to impact people and help them visualize what this world is going to look like. And I think that's really important in terms of having these conversations. And I think that the reality is when it comes to family offices and people that have built up wealth, I think that they are not afraid of investing and they're not afraid of necessarily being ahead of the curve.
They're not afraid of risk, for sure. Yeah.
But they don't want to be an idiot. You know what I mean? They don't want to be stupid. And so what they'll do is wait for signals. And I think that that's something that wait for the government to take a second and say, hey, what's going on here? Wait for the institutions to say, hey, what's going on here? And start putting in more capital. See the infrastructure start to mature and start to realize applications that make sense. Experience, see how AI is starting to now take over the world and actually make an impact. And then when you start to add those dots up, if you're not understanding that digital currency and agents and immutable records for all of this type of things that are going to be happening and the infrastructure for these agents to interact cross companies are going to need to be decentralized and need to have infrastructure that is not owned by one entity, but owned by the contributing economy of it all. I think that you're in denial at this point. Now, I'm not saying that we've gotten right tokenomics and all of this stuff, but I think we're going to figure that out very soon. I think we're going to understand that this is the new form of equity, and we're already seeing assets go on chain. All of this stuff is coming together. So it's not like I just need to show you the map of what's been happening and where it's coming to. And if I could connect the dots enough for you, then at some point you have to make the conclusion of, do I believe in this person as someone who gets it? And then do I believe in his thesis about where the world is going? And then you make your decision. That's really it. I mean, to me, it's not rocket science really.
And then on the metaverse, what was Zuck burning 10 billion a month, something like that, at the peak of rebranded the entire shebang to Meta. Is that the metaverse you're talking about? Or is it a singularity of agentic entity, human entities, distributed network of sorts? When you talk about metaverse, what do you actually see in your mind? What is that vision?
So
about?
To me, it's probably the closest thing that I think that I would probably portray as the metaverse is almost like a Grand Theft Auto. It's an open world that enables people to explore and discover. And I say Grand Theft Auto in terms of just giving you an analogy of the experience. First, it's an open world for exploration, games, quests, things to do with others, collaboration, competition. But the ability, and then this is where it goes from game to me, the metaverse is identity, reputation, capital, the ability to earn, the ability to own, the ability to produce. And when you start to combine those things, I have zero doubt that that's going to be something that we are going to be spending a lot of time in. I just have no doubt. To me, it's inevitable. And I think what Wilder World is the perfect example of a company that's taken the steps to get there. They first had you understand the lore. They then had you buy the assets to start to accumulate early assets of their world. They launched a car partnership with Lamborghini, and the actual Lamborghini car was minted and produced and released the same day in partnership with them. So it's like officially licensed, like that's real. They launched the things that are going to impact your role in that digital society. And then they released the first game, which was the race car game. And then they released the second game, which was the shooter game. And then they just released the alpha of their open world game, which kind of combines all of this together. And now they've layered on the economic layer, which is that every single thing in their world is an asset to be owned or to purchase. And the most recent thing is that they're leaning into the AI NPCs, and that you will build and own your NPCs, and they can perform and build and create and manage things for you, and that will be how you earn in their economy. And NPCs are going to be a major part of the gaming world like they've always been, but they're going to come to life in a different way and produce for you. And they've thought this thing out to such incredibly beautiful, in-depth, deep levels that I think that if given the right resources and the right appreciation of what they've built, they'll be one of those companies that get there. It wasn't Facebook's little silly thing that they built. Like that was dumb. That was just not knowing. It's wild, literally, no pun intended. I just want to support that. Like, that's to me not a company that I'm worried about when they're I don't worry about their vesting date. Do you know what I mean? Like, I don't worry about that token's vesting date. I'm in it. I want to see it through. I can't say that about every project I've ever invested in, that's for sure. Some that are timing, some are trend-based, some are based on what I see from an infrastructure perspective or what's going on with their tokenomics or adoption. I want to see a team like that succeed and bring the world that I believe should come to fruition to life.
You just listened to another episode of the Slice podcast where we uncover the stories of fresh emerging managers across the early stage venture landscape. Next week, we're bringing on new profile to the show. We're joined by a 20-plus year LP capital allocator who's reviewed thousands of emerging managers across his careers and now spends his time helping those emerging managers sharpen the narratives and stand out to institutional LPs. He shares more on that on the pod than anyone we've had on, so don't want to miss this. If you're a manager or a fellow LP, make sure to be subscribed to our podcast on slice.fund/podcast or listen on Spotify or Apple or wherever you get your podcast these days. We'll see you right then.